Right, now we can go. So we spoke about 13.7, and 13.7 has been on our radar for months, in fact, because of the fact that a high before a break of a low is inducement, and you can't be overly bearish without taking this high first, right? This high houses and holds a ton of liquidity. Besides that, if we, and you know, we've for the past few weeks we've been big on balanced, well, efficiency, right? Balancing a range. If you take a look at something on a 3-day, for example, you see we have a decent order block that we're in here right now, right? The idea is to take the 13.7 high out and then roll over. And if you notice here really quickly, there is also an imbalance created here. Can you see this? This body to this body needs to print a down candle. You see that? So a down candle needs to be printed in this box. And how do they print a down candle without taking the box first, then printing the down candle, then going for 13.7, or going for 13.7, then come on the way back down, printing the down candle, right? So the range needs to be made efficient there, and I'm almost certain that they go for this 13.7. I just want to see what the low on this particular candle was, because this order block here, if you look at it, this guy here would be a good candidate, right? This guy on a 3-day, I just want to see what the low of that candle is, and that comes in at 13.73410, and the high of this 13.72980. So already what we're seeing is that this missed the order block by $4. You see that? See the difference between the black line and the red line? So the order block was not tapped before price moved away, which is inducement in itself, because it created liquidity with people putting their stops above here. Price didn't tap the order block, so in actual fact we must look at price coming into this area. And if we're talking order block, then we have to talk about mean threshold and put the 50% on there. So that's what we need to speak about. And if we're speaking about efficiencies and range efficiencies, then we need to look very carefully here, and you can see a slight imbalance here as well. So which means they need to print a down candle here. Right, so we'll drag this one across in time. There, right? So now we have quite a huge level here, demand supply zone, and just above the 50%, taking out the inducement liquidity. So eyes obviously on here. The orange is the tap of the weekly order block, and the second interesting level is the candle block, body of the candle block, order block there, down there. So these are the levels we need to start looking at, and they're on a bit of a mission here right now, because what's happening is we could say the range is efficient up to here, right? Let's look at the top of this candle. They've made the range efficient here. Right, they've printed, they've broken it here. They've come back, printed a down candle to make all of this efficient here, and then they've moved away. What they haven't done, if we zoom in a bit here now, is they haven't come down to this level. They haven't printed any down candles here, so not necessarily now. I'm going to just make this a different color so it doesn't get confused with our blue EO levels, right? They haven't printed a down candle body here, right? Price broke back to the breaker and then moved away. So that level for us is inefficient. And there's also inefficiency up to this level here, right? Everything, when I say efficient, I mean this is only running on buy side. This was only running on buy side until here. They haven't printed any bodies, and anything below this is efficient already, right? So not interested in anything there. So going into, let's try something here, right? If we had the move from here and the draw on liquidity is say 50% of this order block all the way up here, and we grade the swing, cut it down into, let's grade it the other way, 50%, and bring it all the way down here, right? You can see that they've consolidated around the 50%, right? They've run stops and went up to the 75%, and it caught some speed here, but this sideways movement is reaccumulation, right? So it was accumulation, tiny accumulation, reaccumulation, reaccumulation, and gone. So the target for this must be 13.7 into 14K, 50% of this 3-day huge order block lying up here. So now we need to figure out every day, which we will be looking at, is how do they, I'm going to leave this on here as gray and lock it in, right? Maybe black. So every day you have to go into NAS, thinking about how they can get higher. And what they've been doing is, if we look here in particular, this consolidation around the 75%, they broke above, created a dealing range because they took sell side first, then they took buy side. Give me 1 second. Someone's mic is, just gonna mute you. Right. So they, like I said, they took, let's zoom in a bit more because I want you to see this now. They took sell side.
You must mute somebody.
Sorry?
You must mute somebody there.
Yeah, I think I did already. It was TS. You're the only one with the mic on at the moment, right? So I know it's not you.
Okay.
Right. So huge accumulation or reaccumulation range happening in here. Sell side taken first. Order block validated, right? This down candle, and let's look at this clearly. The purple levels are levels that the range is inefficient. We took, there's a range high here, there's a range low down here. You agree? They took the range low, but failure to close below the range low means we target equilibrium, which is somewhere around here, or range high. You see that? You're always going to think about this range play in terms of this. If this is the differentiation between break of structure or continuation to the downside in particular, and liquidity grab. So they grab liquidity here. There's the range low. They grab liquidity on this day here, but failed to close below the range and ran it back up. Once we see this and failure to close below the range low, immediately we need to think about 50% or the range high being targeted, right? So this would have been a trade idea on the low time frame from here to here. Now, once they've taken the low first and then the high.
Poison.
Yes,
Your
sir.
mic. It is. Okay, never mind.
What were you saying?
gone.
What are you saying, Mickey?
You echoing because somebody's mic was on the whole time, so it's difficult to hear you.
Am I still echoing?
No,
Okay,
it's out of the chat.
right. So once they've taken sell side and then they take buy side, right? It gives us a dealing range from this high, this low to whatever high is put in here. That's our dealing range. What does ICT tell us? Look for the 50%. Look for a fair value gap at the 50%. Here. And we know personally that this order block, there's no speed if the order block is not tapped. There's your order block here. So what does price do? It retraces back into the dealing range. And we're not interested in longs unless it's below 50%, right? So that's your dealing range created from that high. Let's do it accurately. To that low. Here's 50%. There's an FEG inside here. There's your order block here. They run it down, tap the order block. The next day, CSD, price runs up, and then it's off to the races, right? So I'm going to remove the dealing range now. This is a classic buy model here. PD arrays, FEG plus OB. Order block plus FEG. In discount, long, right? If we had done this earlier on in the weeks, what we would have seen is, and we graded the swing like I just graded it now, with this order block in mind, then we would know that at the 50%, there should be some accumulation or running of stops, or at the 75%, right? The target or draw on liquidity up here. So if we knew or know that, and we've been speaking about 13.7 as an inducement level that didn't tap into this order block before price fell down here, if we know that the draw on liquidity is higher, then we need to go into every day looking for longs, right? And all price was doing is, if you look carefully every day, all of these FEGs were just being respected. Price was dipping back into FEGs but not closing below. And once you start to see things like that happen, that means order flow is still bullish in this case, because we are retracing into FEGs and then price is continuing, right? Drop down a few notches into H4. There's the dealing range we spoke about, here to here. I think I was short inside here and closed about here. Didn't get an entry in here on that particular day. This created a dealing range. Price pulled back and shot up, right? Now, what's interesting to note here is that we were looking for shorts around here today, purely because big figure was tapped, 13.5. Wednesday offered no news today, so we didn't expect, or there was not an expectation of any volatility today, maybe tomorrow or Friday. And we wanted, or I wanted them to come and take the liquidity here into this untapped order block here, at least here, and then move away. But they had other plans for this today. There was a fake breakout of the meme trend line happening here somewhere. You'll see that on a lower time frame. Let's get rid of this, get rid of this, get rid of that, get rid of that. So what we are interested in now is what's going on here. Now here's a case where a high was broken, and once a high gets broken, what does that make the order block that has been broken? It makes it a breaker block, right? A breaker or an old high is the only time that you would be allowed to buy when price is not in discount. This breaker offers fair value for buying. So what happened here? Broke out, retesting of the breaker inside here. You can see how price has respected the breaker low, and then I think it was yesterday price shot up, right? Now let's look at this in terms of the model that I showed earlier on an M15. I'm going to leave these little diagrams on because maybe we can chat about them just now. If you're bullish, you're in a breaker, you need to see a run on sell side and then market structure shift. So we had this low being put in, price moved away, run on sell side, you see, took the low here. And if we had applied the same logic that I spoke to you about just now on a daily, where you take a range low but fail to close, no candle bodies below the range low, we immediately target the equilibrium or range highs. You see that? That's a strategy in itself. Failure to close below the range low, target equilibrium or range high. So once we did this and then we did this, what did that create for us? We took a low, we took a high, sell side taken, buy side taken, dealing range created, retracement into discount. You'll be looking for PD arrays in here. Now this is M15, but this would have been your dealing range here. This high to that low here. Liquidity engineered or created on the way up is sell side here and here and here. So these need to be taken into what looks like a rejection block, right? Wicks to the downside, wicks to the downside here. Put a block across. Let's zoom in a bit more there. Rejection block vibes here. And if it's rejection block or a PD array, let's put 50% on that. There. Right now, M5 moved very fast away from this. But if you look at the model, in essence, what it has done is, let's look at it. Let's get rid of this and this. We had the move down, we had a move up, we ran the low, price then moved up. Today we got a retrace, back to an order block or PD array, and then price shot up again. That's a model, right? Then earlier you would have mentioned me speak about, let's take a look here. Short inside here on this yesterday, right? This was a simple enough one where we had, again, dealing range created, buy side taken, sell side taken. There's your dealing range. Price retraces to order block. There's your order block. Target the lows here, or order block inside there, right? Today, this morning, you would see this. This is the schematics that I had drawn up, and it comes purely from the fact that when I look at this, there's sort of two models running here, right? There's a model that runs before New York, this being New York Open here, right here, where if you're playing the overnight session or extended trading hours where Asia, London, overnight, what I was looking for is Asia accumulates, right, like here. London manipulates, so this is basically an ICT power of 3. Asia accumulates, London manipulates, and overnight session. If you're not familiar with the overnight session, you can watch it on the Currency Merchant YouTube channel. He's been doing an overnight session overview every day for the past few weeks now. Asia accumulates, London manipulates, overnight session distributes. Once New York opens, we're dealing with another model where overnight session is the look back range. So think about this as the accumulation here. So the distribution from the pre-New York Open model here, the overnight session, gets manipulated here, and then price distributes lower, taking out the overnight session lows. You see that? That's a second model. So there's one for the guys playing just Asia and London before New York, and then after New York it's a totally different beast. So this is where all of this comes from, right? I'm gonna get rid of that for now. Let's speak about what ICT gave you this week. He gave you 3 silver bullets, 3 entry types. He gave you a London silver bullet from 3 to 4 a.m. Right, on my chart it would show as 2 to 3 just because I'm using Chicago time and not New York time. Rigman 00, I'm just going to mute you there, brother. Right, first silver bullet. London, 3 a.m. to 4 a.m. New York time. I've added it into my indicator so it shows here. And these should offer you on indices on NAS 10 to 20 handles, $10 to $20 at least, right? Your second silver bullet, and I'm not too sure why it's not showing here.
Poison,
Yes, sir.
can you hear me?
I can hear you.
You must check again your microphone. There is somebody open and I can't understand what you say.
I can't hear anyone else, my brother. I don't know who it is. I don't see anyone else.
Okay. I close my mic too.
Okay. Can you hear me clearly now?
Yes.
Yes. Okay, cool. What's up, darling?
Yes, now it's better.
How are you, sir?
Good, good. Just running through some NAS stuff. I think you missed the first bit of it, and you may not be pleased with what we spoke about because besides 13.7, it looks like 14K maybe on the cards.
Yeah. Yeah, there's no signs of it slowing right now, so.
Yeah, so we'll just run through it really quickly once more, just so you get caught up before we carry on. Basically what we're looking for is 13.7 was an inducement level, and what we figured out was on a 3-day chart, just to make all of this info a bit more manageable, right? On a 3-day chart, there's your order block here that led to all of this move down. This retracement here that you're seeing here at 13.7 did not tap into this order block here, right? Problems. Didn't tap the order block. And it is the high before the break of the low. It's inducement. There is liquidity resting above this. Secondly, what we did, if that's the case, and that is the order block which lies between 13.7 and 14.3, then if that is the draw on liquidity, and from our low all the way back in October, fib it right to the 50% of this order block around here. It gives us grading levels 25, 50, 75, 100%. Consolidation and run of stops around the 50%, consolidation around the 75% again, and now we're pushing higher. Where is it reaching for? Here. Take out 13.7 because it doesn't look like there's any signs of stopping. Besides that, there is imbalance on a daily. Let's have a look here. Let's get rid of this. There's imbalance up here, right? Volume imbalance, but more so higher candle body here, lower down candle body there. So it looks like they very well on the way of taking 13.7. There is also on a 3-day, what we figured out, there's imbalance. Let's go look at 3-day. There is imbalance all the way up here. You're not going to see it here unless I zoom in quite a bit. There's imbalance on the bodies here, right? You see that? Which means when they are in this region, it means they need to print a down candle body around 14.075. So besides taking 13.7, it looks like it wants to get some speed coming into 14K. Everything up to here balanced. From here to here not balanced. Here to here not balanced. So what happens when they take 13.7K? Do we run stops at the 75% here and then go back? Or do we just carry on going and then take all of this in one go? That's the big question. Now back to lower time frame. ICT Silver Bullet. 3 silver bullets he gave you this week. He gave you, let's have a look if they're all here. They aren't, right? For some reason on my computer they aren't. Let's try and put them in. Right. He gave you the AM, New York AM Silver Bullet, and that time is actually 10 o'clock to 11 o'clock, but because I'm on Chicago time, it's going to be 9 to 10 for me. And then he gave you the PM Silver Bullet, which is 2 to 3 o'clock, and that's going to be, so New York PM Silver, New York PM Silver Bullet, that's going to be 1 o'clock to 2 o'clock, sorry, 1300 to 1400 my time. Right, let's see if that shows up, and let's see if we go to -4 New York time, whether they all align up. Right, 2 to 3, and London is 3 to 4, and there's one here, 10 to 11. Right, all lines up perfectly. Let's take a look at them. I think I posted the video in the Discord as well. M5. So basically what the silver bullet is a time window where an entry will form based on mostly an FEG, right? In this time window, you'd see that, and we're only interested in what occurs in the time window. An FEG will be created when price, let's zoom in a bit more. The trade is only worried about whatever is created in the time window. So for the London, it's 3 to 4 a.m. New York time, FEG created. order flow bullish or bias is bullish, retracement into the FEG, rebalance, target the highs, right? It's the same story for your silver bullet. Let's have a look here. AM silver bullet between 10 and 11. Highs taken, change in the state of delivery, FEG created, retracement into the FEG, target sell side liquidity. And then for your PM, let's find a good example for the PM silver bullet. Here, right? Not the best of examples, but an example nonetheless. Between 2 and 3 p.m. New York time, FEG created, price pulls back, targets sell side liquidity. So between these three, not all three will show up in one day, but at least one should show up in that day, right? So this has given you at least a $10 to $20 move on NAS, or 5 to 10 handles on ES or S&P 500. Once you see this shit happening in this window, as long as the imbalance and the retracement is created inside the window, the trade itself can extend outside of the window's time till it gets to target, right? But within the window, look at the AM silver bullet, FEG created, run to sell side. And these FEGs generally are respected very well. Now I just added this. You can find some indicator for yourself. My guys in Discord, I'll give you my one. You just need to add in these times and that's it. Every day one of these will show up for work, right? You just need to figure out which one it is. As long as it's in the time window, you should be okay. That is basically your silver bullet for London, AM session New York, and PM session New York. Again, within the time window of 3 to 4 AM New York time, an FEG was created. If the order flow is bullish, enter in the FEG, stops below the low, target the highs. This is not a swing kind of model. This is a quick in and out model. You enter here, you target an old high, and you get out. That's it, right? So that's basically the silver bullet model. Any questions on that? I'm sure you can watch ICT's video again, but it's a very, very, very simple model that prints money. If you know how to use it, you should be good. And you can see it doesn't show up for work every day in London, or every day in the AM, or every day in the PM, but between the three you should get 1 to 2 a day, right? Just have to watch out for it. Again, as long as the trade is happening within the window, you should be good to go. Right, so that handles a ton of NAS that we've covered. The last thing I want to speak about, let's see if I was correct. I think slot, I told you there was one today, and I think if we go M15 we may be able to see it a bit better, right? It didn't happen in the window, but there was an FEG created here. I think we were here at this point, right, taking the highs, and I said watch this M5 silver bullet model here, because oops, watch this for the silver bullet setup here on the M5. This is M15. If you look at M5, didn't happen within the time window, but it did come into this area here, and then price took off again, and actually it hasn't stopped. Silver bullet here, how many points would this have offered? any FEGs created here. I don't see any off the cuff here. Maybe if you went M1, you would have probably seen something for a PM trade. Let's take a look before we move on. The window is it there, right? Where could we have taken? We could have taken an FEG inside here. It could have been here, very tiny FEG. But this is all form footing because we're back testing now, right? But there could have been a trade opportunity inside there. Approaching, what time is it now? Yeah, approaching 4 p.m. trade, close of the day. Not interested in anything. Weekly profile puts us where? Let's get rid of the indicators for just a bit. The weekly profile so far means Tuesday, Monday low of the week, right? Monday low of the week. Let me just get my bearings right. Just give me a second. Just want to check something quickly. You guys can still hear me, right? There's no weird audio.
Yeah, no, it sounds good.
Yes.
So if this is Monday's low here, Tuesday gave us a high here, Wednesday was in here, right? Generally what we like to see is if Monday is the low of the week, then Monday low of the week, right? Tuesday goes higher, Wednesday goes a bit higher, then comes back into Monday's range, and Thursday, Friday head higher, right? That's a Monday low of the week. If Monday is the low of the week, especially this week where there was no news on Wednesday, Monday, Tuesday retraces. I think this was Tuesday here. Yeah. Let's do it this way. If we follow this, then we can see. So if this is Monday, Tuesday retraces and goes higher. Wednesday comes back into Monday's range. Thursday, Friday head higher. So if we look at this, it means tomorrow is Thursday. Wednesday can retrace a bit, but Thursday and Friday we should actually be looking for NAS to head higher, probably to target, and then Friday should retrace slightly, which makes our weekly candle look like this. Monday opens, goes lower, Tuesday, Wednesday, Thursday, Friday makes the high, Friday retraces and closes. That's your weekly candle. So you should be going with the bullish bias into tomorrow. I just want to mark off Monday's high and just see what happened there really quickly. Monday's high here, right? Let's look at this. Let's just mark this off. This was Monday's high here. What happens? We said Monday low of the week, so price opened up on Monday, went lower. This is Tuesday. Wednesday retraces in back into Monday's range. Thursday, Friday retrace, close. There's your Wednesday retracing back into Monday's range, even by just a bit there. This is Monday's high. This is Monday's low. If we look at it this way, and FOMC Fed speaks on Friday, right? So that could align with the possibility of a retracement. So if we have this playing now, anything back dipping here tomorrow and giving you something like this, you're going to buy. Buy until Friday, until the Fed speaks, because the Fed speaking could be the sell-off that caps. So Thursday to Friday caps, and then Friday retraces. So going into tomorrow and Friday, we're going to be bullish until the Fed speaks, right? If you are bullish, let's go H1. You're going to look in this area right here. Old high. That's where we're going to look. This would be the area I would look at tomorrow if we get here. There. Old highs, like I said, old highs are fair value for buying. There's your breaker block. Price ran through here, and any retracements back to retest the old high, I'd buy that. Even if price does something like this, makes another high here, it may be a short opportunity to here, then long up here to carry on higher, right? So that's what we're going to look at tomorrow. And yeah, that ends the super long explanation of NAS with the weekly profile and talking about the silver bullet from ICT this week. Let's hop on over to BTC. BTC. Hold on. Which chart do I have open? Right. BTC plans are still for. Let me switch this over to P. Still holding out hard for that 30K, right? Right. The other day, when last did we speak? Last we spoke, we didn't expect. There was no expectation of this getting taken, but what it has done, and if you can see it, that being taken has solidified the idea that we took buy side here and we took sell side here, making this high to this low the dealing range, and any retracements in here, there's 50% of the range. I've marked off range equalizer. Anything here and above here would be to short lower. So them taking this solidifies the dealing range idea. On a daily, them not closing below the range low, like I've mentioned in NAS, and I can show you a few examples here. Here's a high, here's a low, failure to close below the range low, and we target the range high. Same story, range low, range high. Let me rephrase it, right? Range low, range high, or start of the delivery down, right? Start of the delivery down. Because I don't expect them, or I don't want them to take this range high out. But like we mentioned before, there's a daily order block here that has been untapped. So from here to here, untapped. From here all the way down here, liquidity, engineered liquidity waiting to be taken. On H4 we had inside here market structure shift. After OB validation, OB is likely to be raided, so that's what we're looking for, 30K, anything above here. And right now what we are dealing with on a daily, besides wanting to take the range high or target the range highs, anything above here. There was a model by Muro Crypto that showed or how he uses it. When you have a Darth Maul candle like this, basically tiny body candle with long wicks on either side of it. That's a terrible wick. That's also a terrible wick. There, better. What happens is price generally tests one side, right? Once it does, it should go to equilibrium or the range high or the other side, right? So that's the play. That's the smaller play before the 30K play. Here's your Darth Maul candle high and low. I've marked it off here. There's the equalizer here. We're at it again now. Who's that? Marwan. Just gonna have to mute you there, brother. Thank you. We've targeted the Darth Maul. This is the Darth Maul candle. We've targeted the low of that candle. Now the idea, head for the high. Once we head for the high, what stops us from going here? That's where I'm aiming for. If I look at this on a weekly level, let's see what we can, or 3-day or weekly, what can we get out of it? Weekly. Weekly is this, right? Yes, sir?
There is also not too much resistance up there on the way.
Not too much resistance. Let's look at it this way now, right? This candle here that I've marked off in red closed below the range low, which makes the high of this candle, the next candle, the start of the new delivery. You agree, Al Dente? Let's say that again.
Yes. I have to switch my mic.
Yeah, sorry. It's just like this was
Harp
a high.
on it, please.
Sorry?
It said harp on it, please.
Yeah. Harp on it. Did you say harp on it?
Yes.
Yeah. I'm always harping, you know that. My wife tells me the same.
It's good though. It's the only way we learn.
Yeah.
So I need to hear it 200 times.
Yeah, only a few hundred times. That's all you need, right? And point in case is all over, right? All over. Highs 2022 FEG model. Highs being broken with speed, leaving an FEG behind. You know that one? Highs being broke or lows being broken with speed, leaving an FEG behind. The FEG is an area you want to buy in. So high being broken and closed above with speed, leaving an FEG behind. Retracement into the FEG, if you are bullish, is for buying. Let's add one step further to that. The candle after the candle that closed above the range, there's the range. Here's the candle that closed above it. The candle after that is the start of a new delivery. There you go there. That candle houses liquidity. Or that low, in this particular case, houses liquidity. When you are using it, there's your range. Right? There's your candle here in blue. There's your open run on liquidity. Taking the liquidity of that candle and then moving away, right? Same story here. We take the candle low here in blue and then we move away. Let's go up here. High, broken with speed and closed above. The very next candle houses liquidity. There you go here. The very next candle, there it is here. You get it? You get the picture? The candle after the candle that closed above the high. So basically, if an FEG is a series of 3 candles, candle 1, candle 2, candle 3. The start of the new delivery would be the low of candle 3. There's it here in blue. Same concept is being applied here. Here's the range being broken down by this candle. The next so this is candle 1. Sorry. This is candle, the range being broken out. Yeah. This candle 1, this candle 2, this is candle 3. There's the high here. Now I'm going to switch this down to a lower time frame. And we're going to see some interesting things, right? What happened here? See this? See this? Taking of liquidity, right? Now, what's happening here? You see that? See where I'm coming from? And why I want, besides this on a lower time frame being this here, right? Besides on a lower time frame, order block validation happening here. There's your highest closing up candle. OB is validated there. The FEG getting traded through below it is a market structure shift. Market structure shift happened after the OB validation. Order block is likely to get raided. That's the order block up here. We haven't come back and raided it. Instead, what we've done is we've created a series of highs, right? Lower high, lower high, lower high, lower high. I sound like those penguins from Madagascar. Lower high, lower high. All of this is liquidity here. Now, couple that with untapped order block, OB validated before market structure shift, and the blue level. There we go. Here. The blue levels house liquidity. What are they most likely to do? Besides me playing around with this smaller range and this Darth Maul candle high and low that I'm playing around with, we want this one. At least that one. If we get that one, then we can entertain the fact of the OB being raided all the way up here. There. I can die in peace after that. Now, did all of that make sense?
Yes.
Basically, we're hunting liquidity, right? That's all that we're doing. You want me to show it to you? Easy peasy. Highs being broken. We'll be looking for the candles. Let's look for the candle. Yeah, here we go, right? There's a high. Let's zoom in here. High being broken with speed, leaving an FEG behind. This is the candle that closed above the range. There's the next candle's low. Order flow is bullish at this point. We take that candle's low as liquidity and then we move away. That's all that it is. A low being broken, leaving an FEG behind. We close below that low. The very next candle's high becomes liquidity. What do? We grab the liquidity and we move. See that? It's the same thing over and over and over again. Let's look at this one. Which candle closed below the low? Here's a low. This is the candle that closed below the low. The next candle's high. Housing liquidity. Let's make it blue so you understand it. We take the liquidity we move away. See the pattern? It's the same thing over and over again. I hope all of you can understand that. It's the same concept here on a lower time frame. Highs being broken, leaving FEGs behind. Here is liquidity resting. Blue. See it? Candle 1, candle 2, candle 3. Basically, it's an FEG model. And if the FEG is being respected, especially 50% of the FEG, let's have a look. There, 50%. No candle body closes below that. No candle body closes below the FEG. Why would I be bearish?
Because of the change in the state of delivery, you change to bullish.
Correct.
Mm.
Now, you would have seen the change in the state of delivery. This is the only thing I don't like about this, but it'll generally happen because of the fast movement away from a price level, right? On M5 here, as this was happening, what did I tell the guys? CSD, there's a low. Here's the candle that broke below the low. Here's the candle's high. Let's zoom in a bit more. A low being broken and closed below. The high of that candle that closed below this gets taken. That's your CSD. And it was gone. Never look back. So it's an information overload. Trying to balance all of this, all of it, into something that's going to assist you and hopefully direct you in the direction that the market is going. So what did we have? Again, we had Dartmouth candle high and low, which we're playing around with. We have this liquidity blue level. We have all this liquidity, trendline liquidity. We have untapped order block all the way up here. And all of that is screaming for me. If we get up here from 30K, I'm going to start looking for a change in the state of delivery here. That's narrative now, right? Narrative is we take liquidity here. I start looking for a change in the state of delivery. Precision will most likely come if I take 50% of this order block up here, 30.861. And I've said before, if you are bearish, but you don't expect them to take the high, for them to generate the liquidity, they have to do it internally. So in a technical sense, well, not in a technical sense, in reality, buy side taken, sell side taken, this is a bearish dealing range for me. That's how I'll play it. And if I get stopped out, it's one of those things, but here is where I'm going to be playing. So where to next?
I'd say, in fact, if that high where you have the blue line,
yeah,
that is an intermediate term high, gets taken, it will mean that it won't prevent a price from going up to the highs, to new highs.
if it gets taken.
Yeah, that where's the dollar sign, that one, yeah. That
Yeah,
will be
yeah.
an intermediate term high. So if it gets taken, price should be the highs.
Yeah, so there's something in here that I can't talk about now because it's not my concepts to talk about, but there is an option where none of this exists. None of this happened. Right? None of that happened. which means we can take this high and still be bearish, right? I don't want to talk about that much now. We'll play it as it comes here. I think I may have it here. Somewhere here. Let me have a look here. Got it somewhere here. I think it was, what time frame am I on? 4 hour? Nope. Right. Anyway, this is a NAS fractal that I've been playing around together with the accumulation, manipulation, and distribution phases on a yearly candle. We are still in an accumulation phase here. The manipulation phase comes in if we get this move up to that 30K area. This says around 30K, may not be higher than that. Once we enter into the manipulation phase from Friday the 26th of May. If we get up to 30K, this is why I'm looking to short down to at least 22. 22,410 is another one of those blue levels that I'm looking at. At 22,410, let's speak about something else. I'll look at at a run or distribution to 38K, which means we had an accumulation phase. The manipulation phase is retracing here to 22K, and then we're going to have a distribution phase moving up like that, right? This is also why last week I said expect them to manipulate price from last week to tomorrow. Here, from Saturday to next Thursday, which is here, which puts us basically in, if this was an accumulation phase here, this wick and all of this that happened here, right up to here to tomorrow, is manipulation. From tonight onwards, I want to see some distribution. Does that make sense?
Yeah.
Doesn't matter. It sounds very good.
It doesn't matter. It sounds very good. I could be speaking out of my butt and you'd say that. That's why I like you, Al Dente. You always agree to everything I say.
Well, I'm a pupil.
Right. So I've been looking at BTC here on a higher time frame, right? Although there's the stuff here that we spoke about that we'd like to come back down here first and then go higher, or maybe even go lower first, then come higher. But if we let's just look at this realistically here. Here, balanced price range, right? You can call it balanced somewhat. Here to here, not balanced. They needed to print up candles here, you agree? So let's take away this and speak about only this now. Up to this point right here. Let's make it purple again because we don't want to confuse this with the liquidity levels. purple. Right. Here to here, this made the range efficient, right? Above here, up to this point here, it moved away. The range was still not efficient. Why? They needed to come in and print a down candle body. Let's get that right. There. They needed to come into this price range, this high, because everything above it was running on buy side. They came down here, then they went up here, but this little gap between here and here needed to print a down candle body, which they didn't do here. Then we got this run here. What did they do? They print a down candle body. Where? Here. Which is the candle that prints the down candle body? It's this guy. The high of that candle gets taken or traded through after balancing or making the range efficient is a change in the state of delivery. So I could say everything above here, and let's look in particular here, right? This completes a delivery. This starts a new delivery up. Everything, let's look at this little white candle body here. Everything, and we're going to ignore what happened here, right? Everything from here to here was mostly run on buy side, which means I would like them, or ideally we would like them to print a down candle body here in these FEGs or FEG here, and then move away. So the plan is we go from here to here, somewhere around here, wherever the change in the state of delivery takes us. It doesn't have to be 30.8, right? We just have to get into this order block low here. And you can see that it is just below the blue level. So at 30K is where I'll be looking to play what I want to play, which is that, then that, then that. So that's where this comes from. And if I have to resort to Elliott wave stuff, I'd say impulse, A, B, C, some sort of correction, impulse, right? But again, that's 3 waves. Unless this really takes off, which I doubt, really takes off, it's just going to be a 3-wave move to the upside, wherever this stops. And that's going to be it. The range equilibrium, we haven't even gotten to the 50% yet, right? So it's somewhere here. Somewhere in here, probably there, 39K, 38, 39K. And more than likely that comes. So that's all I have to say for now on Bitcoin. My plans have not changed. It's the same plans. It's just adding new information every week to get to where we want to go. That's it. Any other questions you guys have?
Just one, my favorite, nat gas.
Yeah, let's take a look. I can't hear you,
So-
Aditya.
4-hour or a daily or
Yeah.
whatever, but we had lows taken The April lows, beginning of April lows were taken. The end of April high was taken. Just with wicks. So that little cluster at
May,
kind of
April low here.
208. Yeah.
April, what were the lows taken?
So to the left of that, right? Like those two wicks,
Yeah, yeah.
right? So those lows were
And
taken,
yeah,
and
so
then
you
that
could
other.
see continuation on this, right?
Yeah.
And let's apply some of that theory that let's do this now, right? Because I told you that there's a high before the break of the low. You agree?
Yep.
That high is inducement. That's an inducement
Right.
high, and we can't be too bearish unless we take that high. So here's our target, 297
Yeah. At a minimum, right?
at a minimum, right? So let's look at it something else a bit differently. Let's do this, and you'll see where I'm getting at. If you can't see it already. Because the PA is starting to look awfully familiar.
Yep. I've been looking back and forth SPX, nat gas, SPX, nat gas. Nasdaq will be similar, but
You see that?
yep.
It's starting to give me a NAS October low vibes. That's what it's starting to do.
Yeah, and this is kind of what, because I want that little cluster in the low twos. I
Yeah.
want that to be taken, right? Because that's basically your market structure, or the lows before the market structure shift happened,
Yeah.
right? So I want those to come back for those, and then go and take the highs, and then maybe continue on from there. So
Let's see something here from the most recent energetic move down. Let's call it here. So this puts us at about 380 for 50%. Doable. It's doable. 380. It also puts us somewhere in this breaker here, right? The middle of it. Yeah, so somewhere in here. We retest a broken low, order pairing occurs, and then we get that. Then we can talk. So you, my friend, are playing a very long game here.
yeah, I've got patience for this one.
Because I think if
Is
you catch
low
it,
in the long,
yeah,
the
if you
risk is
catch
low
it,
in the long term.
yeah,
So
if you catch it, let's look at it in June, July, right? July, say time-wise. If it starts to mess around, let's hide this on anything below a daily. Switch to a 4-hourly. And look at the area in here, right? These lows most likely get taken out when it does come down, and you have order block FEG inside here. So anything I'd say at $2 you should be playing whenever it gets back here. Even if it does this, whenever it gets back here, that's where you need to be. Because the $2 is where you take it to 380 over however long. See that?
yep.
Price is fractal. It doesn't matter. It doesn't matter what asset it is. The deliveries are very similar. Very similar. This is taking out inducement here, retesting broken lows, break a block, pair orders here. There are probably some big guys that were hoping to go long here to take it higher. It broke straight through, and they would most likely mitigate losses around here now.
Yeah,
That
that whole
happens.
move down, right? So all low resistance now on the way up.
Yeah, it's actually low
Once we get
resistance. It's
past
a
the
low
cluster.
resistance.
Yeah.
Believe it or not, Slav, this is a low resistance liquidity run right up to 490.
Exactly. Yeah. Yeah.
Okay, this is what ICT describes it as, right? You can watch the low resistance liquidity run video. You have this kind of move down here with low resistance. You see this happen, then you see this. You take it, my friend, right up, back up to here. There's your consolidation. There's the low resist. There's the run down, which is thin move, inefficient. So you see this. You see this. You take it all the way back up. Fuck 298. Take it all the way back up here. Why not?
Yeah, and you remember my original idea, right? Was we hit a low in this dollar area, we
Yep.
run to 450,
Yeah.
I guess even up to 5, and then we come back down for that 180 to 160 low, that
Yeah.
order block we've been eyeing since I
Because-
first mentioned this.
Yeah, because what this actually did here or will do here is another sort of inducement where it didn't come into where we wanted to, into the order block, but it fucked off. So my eyes would be here before any longer term
Yeah.
moves up like that.
And then that'll be the long for our 6x, 8x, whatever.
That's the one.
Fucking
So-
new highs. So
Yeah. Set some alarms. Let's set some alarms around 210. Why not? Yeah, and we wait on that one. I think that's about all the time I have for now. We spent a bit too much of time on NAS and BTC, but you guys would have gotten the idea here, right? This one, not so much a low resistance run. It's high resistance because there's a lot of shit that happened in here. It's a lot of shit that happened in there. This, even in itself here, if you think about it, here was a high before a break of a low. This in itself is inducement. So I won't be surprised if they take this out too. I won't be surprised at all. These relative equal highs, can you see how things start to look a bit shitty? If I had to treat this piece of price action as if it were, let's go higher, right? As if it were an M5, for example. What would I say? I would say CSD occurred here. You agree? CSD.
yep.
Retracement. Gone. My entry models tell me I enter at 50% of this, which it hit. Okay. The next one tells me take 50% of the OLR and look there. Equal highs. So between this and this, fuck, I don't know how it, my brain can't fathom it, but it's sort of screaming to us. It wants to do something like that. Can't be too bearish. I think if ever NAS gets back down to 12.5, that kind of level, we need to be thinking about that. Now, this could be some sort of fucking giant thing like this. And for the next year or so, we fuck around like that. Then we do that. So be it. So be it. But welcome to the next few years of your life. Yeah.
Can you
that's
look
it.
at
Yeah.
DXY?
DXY, sure. Where did I have DXY? Not here. Here. I have mixed feelings for DXY because we haven't done what I wanted it to do, which was fill the imbalance that exists down here. It hasn't done that yet. Instead, it's fucking around and going back up. So all I can say or think of is let's treat this as the model, right? As if it were M5 also. CSD here. 50% of the CSD candle here. So be it. 104, 105. Let's look here. We're in a situation where DXY is moving higher, but so is NAS. Fucking weird. Which means one of them is being manipulated. It means one of them is being manipulated.
The DXY for sure.
So here's the model. It broke down. We're going to come back into here and then fall over. So yeah, 104, 105. Yeah. Let's put an eye on it. Low time frame. What can we say about this? Here. 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 All right. Fair enough. CSD. Here. Which means, in a technical sense, or as an ICT student, you would have looked at this high being broken to give you market structure shift, right? So DXY is not bearish at this point, which means retracements back to the CSD candle or the fair value gap in here. Let's start doing this a bit neater. FEG around the CSD candle. There. Retracement in there, and DXY starts pumping again. This would be the blue candle setup there. Right? To give us this, 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 this. 105. So we are looking for something like this, and then something like this. That's it. That's it. I'll post this to YouTube, and we can chat more in the Discord.
Thanks, boss.
No problem. I completely forgot I had TikTok on. Can you believe it?
Thanks.
Cheers. right. Let me stop it.